Hey, what's up everyone? It's Duncan from Overland Journals. Today's video, 4x4 insurance, particularly in today's environment where the second-hand market for four-wheel drives, the second-hand values are just as bad as the real estate market. Compared to pre-pandemic prices, it's double, if not more. All you have, and I'm sure you all know what I'm talking about, all you have to do is look at the second-hand market. The prices are just ridiculous. I've got 80 series, as many of you would know, and compared to what I paid for it 4 or 5 years ago, today I could just stock standard, I could get double, and that's for a petrol. If it is diesel, it's even more, so it's ridiculous. But anyway, the reasons and what's caused this situation, I'm not going to go into. That's not what this video is about, but it's about 4x4 insurance. Now, I touched on this in a video about, I don't know, about 2 years ago, and I'm touching on it again because I had a few subscribers write to me and ask me about 4x4 insurance and how I've gone about insuring my 4B, and also in the context of today's environment. Because if you insure your 4B today, you might buy it at an inflated price, and that's because you got no choice. But the insurance companies go on a certain value, and especially the older your model is, like my 80s, over 20 years old, and the insurance companies will only give you a certain amount. How do you manage this? So I'm going to share with you in this video how I've managed my insurance, and I've also done it in such a way, towards the end of the video, I'll share with you where I have done it in such a way that if I don't use the insurance, it comes back to me. I get the money back. So keep watching the video till the very end. Welcome back everyone. Before we dive into today's video, I just have a few things to get out of the way, so please bear with me. One is the Christmas hamper giveaway Ajani and I are doing, which is our way of saying thank you for having supported the channel. The hamper includes a 2022 calendar with pictures from some of our favorite spots we have traveled to here in South Australia. 2 ceramic coffee mugs. It says I have red dust in my blood, so you get 2 of these, and you also get 2 stainless steel drinks bottles also saying I have red dust in my blood. So head on over, sign up if you haven't already. The giveaway draw happens on the 30th of November on a live streaming session on the channel, so everybody will be informed closer to the time via email, and I'll also announce it on the channel. Secondly, if you find the content that I create of use to you or of value to you and you'd like to try and help me out, please head on over to my Patreon's page and buy me a cup of coffee. You get certain benefits for being a Patreon supporter. That's all mentioned on the page. Now, at the end of this video, if you liked it, if you found it useful, please give it a thumbs up, leave a comment behind, and if you haven't subscribed already, hit that subscription button, notification bell, because my channel is all about sharing my experience in overlanding with the rest of the community. Now, let's get into today's video. Please understand, I am no expert in insurance. I'm talking about purely the way I've looked at it and how I manage my insurance. Now, insurance is all about providing or having that safety net in case of a what if happens. So a lot of factors come in, and everything is relative. So how valuable is your vehicle? What in financial terms? How much of gear have you put into it, accessories? So all that comes in mind. So I'll share with you the thought process I went through and what I've done in terms of insurance. So for me, as you know, most of you will know, I have a 20-year-old 80 series, and I've put in a whole ton of accessories and other gear, which probably is more valuable than the purchase cost of the vehicle itself in financial terms. So when it came to insuring this vehicle, I spoke to almost all the insurance companies out there, and the one thing that I kept running into was they would give me what's known as agreed value. So in my case, my 4x4 was coming to, because it's being 22 or 20 odd years old, the value was $10,000, and then they were prepared to give me a little bit more on top of that to cover for accessories and other gear that I've got on it. So that wasn't good enough as far as I was concerned, because I had put, like as I said, I put in a lot of accessories and gear into it. So, and I kept, coming onto brick walls, because they wouldn't give me as much as I would wanted to, as even though I was prepared to pay a premium. And then I got thinking, what are my risks? What are the risks that I'm going to run? My vehicle stays parked at home, comes out only when I go on a trip and odd occasional Sunday drive sort of thing. So my risk is that much less. It's not a daily runner. However, then all my gear that I've got in it stays in it waiting for the next trip. So my fridges, all the camping gear, the swags, the tents, the whole works, everything stays in that. So that's packed and ready to go whenever I decide to go on a trip. So then I looked at trying to get the insurance companies to give me, at least 80% up to the value of what I feel it's worth, and they still weren't too keen on that idea. So eventually I had to do a lot of thinking, and then I realized that, okay, when I do a trip, what are my risks? So risk is the worst case scenario, accident, God forbid, the vehicle gets written off or it gets burned to the ground, I lose everything that I've put into it. So that got me thinking. So I've got a situation where it's the value is X amount, what I've put into it. I'm talking in financial sense, not the other, not the sentimental values and anything of that sort. But then the insurance companies are only prepared to meet me not even half the way in terms of value. And then the other risk I ran was, if I'm out on a trip, on a remote trip, or even on a convoy, and something goes wrong and the vehicle breaks down or have an accident or whatever, then I need to get help to have it towed away, and that's going to cost a considerable amount of money depending on how remote you're in. So that could range from anything from $3,000 to $4,000 all the way up to $15,000, $20,000 depending on how bad it is. So that was the kind of the risk that I was looking at. So eventually what I did was, I was not prepared to pay unnecessarily for insurance where the value I was going to get back in the case of a claim it didn't marry up. So what I thought was, okay, so as long as I'm on the blacktop, as long as I'm doing a daily run or a city run, the chances of it being written off entirely was considerably less. So I then decided, okay, I'll go with the agreed value, so that if there was an accident or a theft or fire or whatever, the chances of everything getting destroyed in one hit would be that much less. Hope this makes sense. So I decided to then go with the agreed value with a particular insurance company. I'm not going to mention names because it's not about pointing towards one particular insurer that you need to work out. That would give me the most value for the least premium, comprehensive premium. So that covered up to a certain extent, so I could manage my risks within that. So for example, if someone ran into my back end of my vehicle, or I drove into somebody else for some reason, or whatever, something happens, the chances of damage would be within that managed amount. So that was okay. I was happy with that. So I went with that insurance cover. And then it covered things like, windscreens if they got cracked and so on. But again, coming back to what I said all along, it didn't cover everything in the eventuality. So that's something I had to manage. So how do I manage that risk of having everything destroyed? So how I've done is I've made sure in terms of electrical fires starting up. So I've made sure all my electrics are in top shape. I check them every now and then myself. I also on a regular basis, when it goes in for a service to the garage, my preferred garage, I get them to go through my electrics, especially after a trip. And I've been on a lot of corrugations and so on. Whether a vehicle is due for a service or not, I'll take my 80 into my garage, the preferred garage, and I'll tell them, keep the vehicle for a couple of days, go through it from top to bottom, check all the mechanicals, and then check all the electricals. And if there's anything, the slightest need that you feel should be replaced, go ahead and do it. So that way I manage any possible chances of having an electrical fire. And again, if I get something new installed, electrical, I make sure it's done properly. If I don't really have the experts myself, so I get the garage to do it for me. So I know for a fact that it's done professionally, so the chances are limited in terms of having some kind of a problem. Mechanically, same thing. I always make sure it's in complete tip-top shape. So when I get out there, I have that peace of mind. Secondly, the chances of having some kind of a mechanical failure leading to an accident and then damage is that much less. So it's all about managing it. Then when I load the vehicle to go on a trip, I make sure I stay within the limits of my driving skills and within the limits of the vehicle itself. And I certainly don't want to exceed the legal limits that's allowed in terms of GVM of the vehicle, so that again, I am managing it. Again, when I load stuff onto the vehicle, especially on the roof rack, I make sure the weight is evenly distributed and within the load capacity of the roof rack as well as the load capacity of the roof itself, manufacturer suggested. So again, it's all about managing. So I work within these to manage my risk. So doing all these things and having all these things in place helps me to minimize that potential risk. So in that way, I'm kind of covered within what the insurance companies are prepared to give me. And as I said, I don't want to pay too much insurance because, as far as I'm concerned, it's something you pay for something that possibly could go wrong, may not happen. But then at the end of the day, I don't want to make some corporation rich, if that makes sense. Not that I've got anything against corporations, but it's money going towards someone else when it's never coming back. So my thinking is keep it as minimum as possible and have somewhat covered and then manage my risk better. Now comes the second part, where if I'm out there somewhere and something goes wrong and have to get towed away. Now I know there's one or two insurance companies here in Australia which caters for the off-road community, and they do provide insurance cover if you had to get towed away, either due to a breakdown or an accident or whatever. There is certain, but then that comes at a cost. You got to pay a premium, and you can't argue that because it's a service they're providing. You got to pay for it. So again, I looked at what kind of trips have I got planned over the next 2, 3, 4, 5 years. I looked at my bucket list, what it was, how remote are these trips, and the chances if something did go wrong, what would it cost me? So, and based on that, I said to myself, I'm not going to pay a premium to have it covered, but I would do it in a way that sort of benefited me, if that made sense. And this is what I did. So what I did was, okay, so I'm going to, if I have an eventual breakdown, hopefully not, I need to get towed away, okay, I would need approximately X amount of money. So, you got to work it out based on your vehicle and your type of travel. So I had a figure in mind. So in the worst case scenario, this is the kind of money I'm going to need to get myself out of that situation. And then what I did was I got myself a credit card with a reasonable limit, what I would like to call a manageable limit. Okay, so don't get yourself a credit card which is 20 times the level of income you're going to get for an annum, and then you're going to get, and if you did use it, you're going to have trouble trying to pay it back. So don't do that. So keep it always manageable. That's something I like to do in my life when it comes to anything. I like to keep everything manageable. So I got myself a credit card within, as I said, a credit limit that's manageable to me. But in my mind, I said, I'm not going to use that and keep it purely for my off-road travel to be used, nothing but other than if I was in a difficult situation, I needed money to get myself out of that situation through a tow or whatever, that's when I'll use that card. Otherwise, that card does not even stay in my wallet. And then thereafter, from the day I got that credit card, what I did do was the amount of money I would have paid in terms of premium over and above what I'm already paying as my insurance comprehensive cover, I worked that amount out. And then I started paying that into that credit card. So basically, I'm putting money on top of the unused credit in that credit card. Hope that makes sense. So every month, religiously, as in my mindset thinking, I'm paying an insurance company, but in fact, I wasn't paying an insurance company. I was paying into my credit card, which is an unused credit card. So every month I have a certain amount which automatically I put into that credit card and I build it up. So now I've got a considerable balance in that card. So the nice thing is, if I did get into a situation during one of my travels and I had a problem, then I've got that amount of money partly that belongs to me and part of it being a credit facility through a credit card from a bank available to me. So no worries. So if I had a problem, here's the card, pay for it, job done, and my family safe. And down the track, if I've never used this card, all I do is give the card back to the bank. I've got no money to pay them because I've never used the credit. And the excess money that's in there for however amount it might have built up over the period of time is mine. I get it back. So that's the thought process I went through in terms of insurance. Now, it may not be the best way of managing risk. I'm no risk expert, and there might be somebody watching this video who is a risk expert, who might be in the insurance industry. If you feel there's a better way of managing, please do share in the comments below, because I'd love to learn, and I'm sure everybody else watching this video would love to learn as well. But that's my way of looking at insurance. I hope you found it useful. If you liked it, do give it a thumbs up. If you've got comments, questions, or whatever, please do leave them in the link below. If you are new to this channel, you have not subscribed yet, please do subscribe. My channel is all about sharing my experiences in overlanding with the rest of the community. Give this video a thumbs up if you found it useful, and thanks for watching, guys, and I'll see you in another video very soon.